All right. I'm off the cannabis stocks. Let that cool down. Let some time pass by. And I decided to revisit one of my stage 4 list, Dollarama guys. And I did a podcast a little while back, Stan Weinstein stage analysis, and I had it edging in to a stage 4. And I just want to take a little look at it, see what's up with that. Here's a monthly candle chart. 12-month moving average still going upwards. A lot of price action below. Lot. Just here. And the more the price action is below, the more that line is going to start going down and down. Still an uptrend, but you never want to be in a stock if the close is below 12-month moving average, even like here. So what you want to do is probably sidestep, wait until you have a continuation breakout, and then enter on the next move or the next signal for you to get in. That's where you want to cut your losses, take your profits. Trendline violation à la stand, that means a break on the 4th point. If ever there's pullbacks below previous lows. So if you go up, pull back, go up, then you move your sell stop. It's not healthy if you have a low. See, low, higher lows, higher lows, higher lows. Oh, lower low, not a good sign. You don't want to be there. So why? I believe in Dollarama. I believe in the business model. What? That's not what the price action is telling you. It's telling you, for whatever reason, for whatever theory there is out there, the structure, the supply and demand, it just can't support that price, and it's just going down until it finds some support, and then maybe an influx of demand or a shortage of supply, and then the price could go back up. That's simple as that. That's why on my 12-month on my monthly chart trading framework, it's just price, no noise. There's noise everywhere. Sometimes I dabble, I try different things, but this is my bread and butter. Keep it simple. Implied measured move. I would have shorted right here on that break. That measured move, go down here. Here's the target, still there. There's a pullback, and that's what we're gonna go see right now. That pullback, what it looks like on the weekly, guys. Because we're doing Stan. Okay, let's deep dive this. 30-week moving average going up, all sweet. Here you're a millionaire, you're the best in the world. Oh, close below 30-week moving average, not very good. You should be out right here. You see it right here. This is super duper well made, this Mansfield relative strength. It's not just that you're comparing against the SPX. The author made it that if the 30-week moving average is going upwards, you're above the zero line, and you're close below above the 30-week average, it's green. So it kind of combines all those signals, and so that green zone is almost a stage 2. The entry, you have to go look to see if there's volume, twice the average of the previous 4 weeks. You have to go check to make sure you're above. There's no overhead resistance, so you're above the Ichimoku cloud. And you have to go check on the higher trend on the monthly and see if the trend's in your favor. You have to go check, apply all this to forest to trees, so the index, the sector and the industry your stock's in. And you could compare your stock to others in its field and see if it's the best one. So you have to do all that. There's no mechanical things. This is just a small part of the mechanics of stands. And you don't want to get it. You always want to keep an eye on it. I guess you could enhance this and have checks if there's volume, how the volume is, and but that's probably the next version. I like going through it. I like it being there, but I also like doing it the old school way. And here, did we have the 3 breaks? 1, 2, 3. It's kind of a mess over here. 3. And you could almost say there was a 4th 1, 2, 3, and 4. You're out there. So that's your exit. You would have rid. Where did it start? This is crazy. At least here. If you didn't go in. Whoa. Wow, that is a monster of a stage 2. That is just insane. Look at all that green. That is insane. Some price action below 30 average going up. So you'd exit and you'd re-enter on these high candles, high volume candles on a horizontal breakout line. The whole stand tenants, the system, the triple confirmation. You'd be doing that every time before you re-enter. And right here, here's probably the last entry right here you could have entered. Not the last entry you could have entered, but to ride this stage, you could have put a position here on this crazy volume, another position here on this crazy volume here. So you could have had 2 positions, and here it's just slowing down, and then you're out. But what happens after that? It's a cycle, right? Stage analysis, stage 3. And I think when I just looked at this before, like I didn't draw any lines. These are the lines I had from my previous podcast. And I think I had anticipated that it had the Ichimoku cloud that I had to go through. I think the price action was right here. And I guesstimate that we'd hit some support here. We'd bounce back up to the breakdown line. And then after that, we'd continue down through the Ichimoku cloud and then reach that target, that monthly defined target there, which are these lines here. And 1, 2, 3, 4, 5 weeks have passed. And where we are, we have the pullback. Within 1 to 3 months, usually you have a pullback. So now what you have to do is you have to go check out, did that pullback, is that a healthy? Does it confirm that it's simple pullback and not a reversal? Well, price action goes up, and you want the volume going down on the pullback. See those green candles? Every time it went back up, less and less and less. So right now, this is looking like a classic entry right here at a stand. You're still in the Ichimoku cloud. That could be an issue, that why this will not be an A++. You could eventually, if you don't want to play it here, you could eventually wait for you to come right here. But this is the place where it's going to give you the best risk to reward, because you don't have to put your sell stop super high. This is the resistance. Put your sell stop on top of this on the top of this candle, and then you let it unfold down here. You're above the 3-week moving average, above the Ichimoku cloud. You have all these protections right here, so it's very strategic here. You're not far away from your entry point. Make sure you don't lose more than 1% of your NAV when you position size, in case you reverts. And then the upside, well, the upside you don't know. It could go all the way down. You've identified some resistance, some support along the way. Expecting that, pullbacks on that, bouncing back on the 3-week average. Use that to your advantage so you don't go crazy emotionally and I have to get out. It's pulling back. I can't take it. Let the system tell you when to exit. You know, Stan tells you how to exit. You have to wait for it to go down, go back up, then go down, then you move your sell stop along the way, guys. That's simple. Yet very hard to apply when the emotions is there, when you're looking at stock tweets, when you're looking at Twitter, when you're looking at the news. It's fun sharing. I like sharing on Twitter and all that. But ideally, and you get to learn stuff from people, so that's great. But if I just had the access to books, and you read your books, and then you turn off the TV, turn off the news, and you had a software that would give you tickers, but would translate it for you, just to show you graphs, and you could trade off not knowing what the ticker was. That'd be a lot easier to apply frameworks successfully. To eliminate emotions, that's what you have to do, right? If you do a automatic robot that does all this for you, it doesn't care if it's Dollarama or Apple. If you're shorting, how could you short the Apple? That's never going to go down. Well, it doesn't care. Looks at the charts, you have your parameters, and it does it. I guess that removes part of the fun, right? And here you could start drawing the trend line. 1, 2, and then you wait for a third one. You don't sell on the third violation. You have to wait on the fourth. So this probably adapt. to where it's going to be. So that's how it's playing out, guys, for Dollarama. Stage 4. Could wait to get out of the cloud, but everything else is looking underperforming the SPX. Not looking super duper for Dollarama, guys. I'll leave it at that. Stage 4. Ciao, guys.